Hey, good afternoon everyone. This is Trader Tim from eMiniMind, bringing you a Monday market analysis video for October 17th, 2016. The market has definitely shifted in this last week, and I want to talk about a couple of things that I'm looking at to kind of act on as potential trade setups going into the week, a lot of which is fundamental structure of the market. So we have broken the 50% retracement short as well as the 50% retracement long, which means we are kind of in a state of chop, a state of caution when both fail back to back. Structurally, we have put in a lower low, and this is just based on trading hours only data. So we've put in a lower low as to the low back here. We were in the triangle formation. We broke down out of the triangle, put in a lower low, and then a lower high, and broke the low of that high bar. So we are looking for a breakdown towards 2086s. And our two lines in the sand are going to be the high of Friday, right here at 21.43 and then the low of Thursday at 21.0775. So if the low breaks, we will see that as an opportunity to for the market to accelerate to the downside, assuming that there's a lot of shorts down here or a lot of stops down here, just by looking at the bulls stepping in and pushing the market up. Most of this lower end of the wick involves new trades being initiated, which means stops are likely below lows. And if we break the high of Friday, then this candle on Thursday could end up being a low of the start of an uptrend that would take us up towards the 2160 level. So in the meantime, looking for the market to be a little bit dangerous. So I'm going to say be aware of the previous day's range and be extremely cautious on inside days. But if we get an inside day just being where the market price of the current day is trading within yesterday's high and low. Now, if we open up outside of the previous day's range, trading hours only, that's a good sign that we're likely to have better trading opportunities in a good trending market. So be cautious of inside days, and if we get a day where we get a gap on the open, we could have some really good trading opportunities. There's a lot of news coming out this week: Monday, Tuesday, Wednesday, Thursday. Friday is pretty quiet. So just be prepared for things to be a little bit choppy down here if we are staying within this range, this 21.0775s up to 21.4325s, and certainly within a inside day. So look for the market to gap in the next couple of days, and just be aware of where we are in relation to that. I wanted to look at the broader indices on the ETFs, just so we can see some of the volume. S&P is pretty nasty looking. Same with the Dow in terms of the sideways chop that's starting to drift to the downside. But if we look at the NASDAQ, we can see a little bit cleaner chart where, yes, we were moving sideways and we have a clear lower low and a clear lower high. Not an extremely high volume, but we are starting to drift lower. And then in the NASDAQ as well, almost breaking the prior swing low, and all declining volume on this move lower. So the VIX isn't super high in terms of a major spike, but as I was talking about this swing low down here, if we were to break, there's going to be a lot of stops down here at this 2107 level, especially because it's close to a round number, 2100, that it would be, on a day where we break 2107.75s, I would look for a big body candle that might take us down into that 2086 level. So that's what I'll be looking for this week. Tomorrow we'll be doing trading room at eminimind.com/VIP. You can tune in there, and if you have questions, shoot me an email, tim@eminimind.com. Thanks. Talk to you soon.